What's up, everyone? Welcome back to Money Market Truth. I am Mark, and this is my co-host.
Hey guys, this is Mo from OTB Clubhouse.
Hopefully, you guys had a wonderful week. It's been very hectic, right, Mo? I mean, it's been going up and down. We can pretty much jump right into it. So let's talk about Elon first. So let's do the breaking news.
This is Channels Television's breaking news.
So this is a couple days old already, but let me just throw this up there real quick so everyone can see it. So a couple of days ago, we all know that the Twitter deal fell through, which, by the way, since episode 1, what have I been saying, Mo? What have I been saying?
Go ahead. I think you've been saying that he won't buy it.
Yes.
Right?
Yes. I'm officially the GOAT now. I'm officially the Elon Musk GOAT. Yes. I told you guys it wasn't going to happen. But I mean, now he's getting sued. But there was this article that came out, which I thought was really interesting. They were saying that this could have just been a maneuver by Elon to essentially liquidate $8.5 billion in Tesla stock without getting investors worried. Which is actually pretty smart if you think about it on like the business aspect of things. I mean, it sucks for the retail investor who end up investing in Twitter at like 45, 50 bucks. But the fact that, you know, like any CEO that ends up liquidating that much, it makes investors worried, right? Typically. Right, Mo?
Well, it does. But you're missing a big point here. He's going to get fined $1 billion. Do you understand how much that is for Twitter? That's $1 billion is more money than Twitter has made over their lifetime in profits.
Correct. So it's kind of a win-win for both, right? Because like he probably doesn't care about that $1 billion because in the end of the day, that's going to be a tax write-off for him as well. So he gets to liquidate $8.5 billion and then pay a fine of $1 billion, which he could then write off on his taxes. And Twitter will still be able to make some money off of that, you know, after the lawyer fees, et cetera. I mean, that was what the whole article was about. I never thought about that. But then again, you know, depending on who you speak to about Elon, you know, they like to always go back to the fact that he's on the spectrum, right? He's got Asperger's, and they typically say that people with Asperger's tend not to lie. They're very truthful. They get obsessed about certain things. Huh?
You're right about the money part. I don't think he cares about money. I don't think 1 billion is anything. With these guys, it's not about money. It's about winning. If he gets the penalty, it means he was in the wrong. And I know how they're spinning it. I personally, if you ask me what I think about Elon after this, I think he's lost a lot of respect from me and a lot of other people that I know, because you're buying a big company, and how the hell do you not know about the situation? Like, you do your due diligence. It's not a small amount that you're putting in. And then you play all these games. You go on Twitter and do everything to now pull this off. I don't think this, like, there's only so many times you can get away with stuff like that. There's a $500 billion scam that's on him for Doge, and now it's this. This doesn't look good on him. He might get away with it, but now he's lost respect, in my opinion, from a lot of people.
Yeah, and that's what I'm saying. I think this was intentional. I don't think this was like a mistake. I think the guy is way too smart to not have known that they have a lot of bots. I think really it was a way. Yeah, I think maybe he even invested and bought some shares in Twitter right before he announced that he was going to acquire it for. He did.
Okay, so here's what happened. He declared that he bought 12% share, and then Parag, which was the CEO, limited him to, I think, 12 or 13, because they said you can't go more than that, otherwise we're going to do shareholder. Then he showed that he's showing interest in buying it. Then he had the whole conference, I forgot where he said that he doesn't really worry about the money. He's got the money, and that's when stock started going up. But yeah, first he bought, like, I think 10%. Sorry, he bought 10% shares first, and then Parag was like, you can't buy more, because if you do, then we know we need to give you a seat on the board. But then he's like, actually, I want to buy the whole company and take it private. That's how the whole thing went.
Yeah, and I've been saying, I do remember that, so I totally forgot about that, because he did initially just buy a certain percentage, and that's what brought the stock up to nearly $50 at that point, because he said he was going to buy it at $54, I believe, and then, you know, he said he wasn't going to buy it. He wasn't sure. He wanted to do some more investigation, so we'll see what happens. I think it's funny that people on Twitter think that this lawsuit is going to force him to buy Twitter. I mean, if that happens, that's going to really change the way the law works, because that would be crazy. You never know, though, right? Because, I mean, look what happened back in the day with McDonald's, right? Fat people sued McDonald's because they ate too much McDonald's, or they burned themselves drinking coffee. So they have to put a sign on a thing saying, you know, this coffee is hot. So you never know. I don't know. America's weird, man. So you never know.
So this is like an option. He's got the right to buy the company. He's not obligated to. If he does fail, he's going to have to pay the fine. That's as far as I know. Now, Twitter has hired one of the top lawyers that's going to get into litigation and whatnot. But this is bad. This is ugly.
Yeah, it definitely looks bad. It definitely looks bad. And that's even more of a reason why I think Tesla's still going to drop down. But it ended up going up a little bit today. And then, I mean, I think it's because of the, you know, the little rally that we had. But this is looking really bad. That's why I never liked investing into anything that Elon ever speaks about, because it's become like Tesla's no longer Tesla. I feel like people are now investing in him. They're not really investing in the company anymore. It seems like it's just like a cult-like following. We always talk about that anyways. It's kind of like Apple, you know, it's like people have such an infatuation with Elon, the person, that they're just willing to invest into whatever he says, the Doge stuff. I think he may lose that case, potentially, the Dogecoin case, because I know they're trying to crack down on a lot of these influencers pumping these coins and then, you know, dipping out. I saw this whole thing where Lana Rhodes, do you remember her? She was in the porn industry.
Yeah, so and then, I believe there was a 2-point-some million scam where she launched her NFT and then she rug pulled it.
Yeah, and that's what I'm saying. So like, and she disappeared off the face of her. I don't think she's not doing her podcast anymore. I don't know what happened to her right now, but yeah, she took basically $1.5 million worth of people's money. So I'm starting to feel like that's kind of what Elon's doing to the retail investors, and if he keeps doing that, he's going to eventually, you know, burn some bridges. I know he definitely burned bridges with Wall Street. I know investors are kind of iffy now about investing into the company. And then they're talking about doing the whole split, which I don't think is a good idea either. I'm not sure when that's going to get confirmed, if the board has to sit down and speak with him about it. But I know he wants like a 3-for-1 split, which is going to dilute the stock even further. There's going to be more shares out there and stuff. So I don't know. I don't know if this is his business decisions right now, or is really the way to go. I don't know. What's your thoughts on this whole thing?
It's just, I think everything that's going on with Elon, just speaking about Biden's, now Trump tweeted about him, not tweeted, on his Truth platform. He posted an article saying that Elon was begging for support for all the stuff, like his cars that have issues, his rockets that don't, like, it was a pretty mean tweet by Trump. But everything that Elon's doing now is getting noticed, and I think they're all being noticed for the wrong reasons. So the script got flipped. Does that make sense? If you asked me before, even after the whole Doge thing happened, it was still fine. Like, people thought, you know, Elon's smart. Like, everyone thinks he's a genius, but he wasn't harming the normal people, the laymen that were trying to trade retailers. Now retailers are getting screwed because they're getting rug pulled, right? Like, how do you not know about the bot situation? How do you, like, Twitter didn't make any money, bro. Like, have you, like,
years? Yeah,
they don't do Twitter ads that much. Like, it's not a big thing. Everything Twitter does is pretty practically free, and he was going to use it not for money. Make sense?
Yeah, he wanted to take it, you know, private, and then so now kind of be his own government.
If I was going to do it because of money, you're like, I'm buying something from you, you told me I have 1 million members and now it's only 500,000, I'd be like, no. First, he's not doing it for money. Then he's a smart guy. He could have hired people to figure out the whole bot situation. All of that could have been avoided, and a lot of people lost money. Again, their fault, but that's not how people will see it, because they trusted him, they placed value on him, and this happened. So all in all, money aside, losing respect is a big blow. And then if he loses the case too, it's going to be bad. And he's going to be attacked from a lot of different places, because there's a lot of shit that he's stirring right now.
Yeah. Did you end up buying Twitter?
I bought stocks for trade. I always trade, bro. If you want to know the 2 stocks that I have, I have SIGA right now for the monkeypox situation. I added at around $12. I'm going to hold it. I think that stock can go 20, 30, 40, 50. There's no end. And then I add a small portion of NET, cybersecurity stock.
Yeah, Cloudflare.
Yeah.
Why do you like that one so much?
Well, I don't have anything right now. So I wanted to start something, but then because my assessment was 3,500 is kind of where we should stop at. But now that I'm looking at the stuff that's going on, I don't think we have a stop right now. We can go to 3,200. We can even possibly go to 2,900. There's no soft landing happening. And we'll get into the other stuff, which is why I think we're going to drop. But
yeah. Okay. Well, we'll see how this whole thing with Elon Musk plays out. So what are you guys' thoughts? Comment below. Tell us what you think. Are you still a Elon supporter, or do you think you definitely crossed the line this time around? So, but yeah, let's get into the next subject, Mo. We're getting into the CPI and some recession talks. So.
Write it down and keep it for future reference.
All yours, Mo.
Okay.
What do you got?
So let me explain you the macro point of view. Macro point of view was CPI was going to come 8.8 was the expectation. We got 9.1. We dumped. As expected, we bought the dump. We went up and people were surprised, had no clue, because this is the highest CPI we've seen, I believe, in the last 9 years. After the report came, another news came. Bank of Canada is increases, like this is confirmed. They're increasing the rate of interest by 1 basis point and 1%, which is 100 basis point. After that, Biden tweets saying that I give full freedom to feds to make whatever changes they need to bring the inflation down. Then we start Fed speakers tweeting. After the CPI report came, another news came that there's a possibility on July 26th, we're going to get 100 basis point increase in US as well. And based on the Fed fund future, there's a 72% likelihood now that the rate's going to be increased by 1%, which is massive. If I give you the number for Canada, the last time we saw such a big increase was 1988. So this is like, all this stuff is so historic, but what people aren't getting, economy is not the market. Market is not the economy. Sometimes the reaction comes late. Sometimes the reaction comes in early. So a lot of people got in, just started loading up in puts, and that's the last thing you want to do. And I brought this up a million times. The easiest way to play gaps is pull the VIX chart. VIX, basically layman terms, is telling you if people are buying puts or selling puts. When we opened, VIX started dropping. There's no reason for VIX to drop. VIX should be stable, showing that people are holding puts. People are selling puts, which means SPY is going to go up. So we added Apple calls, we added SPX calls, and it's simple. There's no chart pattern, nothing to look at. It's just basic macro pattern recognition. That's what you apply. What happens next now? Usually the reaction is usually late. However, we saw close to 6.5 million in Apple calls for October 165. Then I saw 2.6 million in SPY calls for October as well. So a lot of call buying happened. We're going to have to see what the reaction is. I'll give you two numbers and then I'll pass it on to Mark. 37.75 on ES. If we don't hold that, we can see 3,600. If we stay above that, we can go 39.50 to 4K for SPX before we see the next leg down.
Wait, say those numbers again, because I think you may have said those wrong.
Okay. So for puts, I'm looking for a break of 37.75.
37.75. Okay.
We break that, we can see 3,600. For higher up numbers, we need to get above 38.20. And as long as we can stay above 38.20, we can see 39.50 and then 4K before we get the next leg down. Next leg down.
Yeah, because I was just pulling this chart up to show you how bad inflation has gotten. By the way, it's the highest it's ever been in 40 years, not 9 years. In the past 40 years, that's what the reports were saying. So this is it's pretty creepy to see these numbers. By the way, as I know, the White House was currently, as of today, was trying to downplay this whole thing, saying that this stat that I just pulled up there, that is delayed, which it is. It is delayed. The CPI is a month behind, but he's saying that when I say he, the president's saying that it's a little bit of an overreaction, and it's looking like these numbers are delayed, so don't focus too much on these numbers.
Yeah, he's saying that the gas prices went down, so the number aren't accurate. He said that
correct.
every single month for the last 4 months, and the month after has always been higher. So this is like, there's no words that I have without getting political here. But yeah, the facts are facts.
Yeah, it's funny because today when the CPI was reported, there was this video that was posted by the Republican Party where they showed Biden. I might just even put it up there, edit it into this video, where they show how he was been downplaying it for like over a year when it first started, like saying that I think this is the top, this is the highest we're gonna go, we're not gonna go further, and it's just constantly, it's just progressively getting worse and worse and worse. So it's scary. I know a lot of people are probably wondering why is the Fed going to raise interest rate if the inflation is going higher. Do you want to touch on that a little bit so people have an understanding exactly the reason why? Like, the higher the inflation, the more he's going to be aggressive.
Okay, so initially when this whole thing happened, everyone thought we had a supply issue, right? Supply issues meaning like the demand's the same, people aren't just been able to get stuff, so chips and all that, right? Cars are delayed, house material, all this stuff. So people were thinking that's why prices are going up. Then we realized it's not just a supply issue, it's also a demand issue because of the money that we printed. So now they're trying to curb both. They're trying to fix the supply and reduce the demand. And the only way to do that is make the cost of borrowing expensive, right? So if, let's say, your mortgage is higher, what are you going to do? You're not going to be like, let me go buy another house. Or if you want to finance a car, you're not going to finance it if the rate has gone up. So that's another conversation I was having with the realtor. If the house goes down from $1 million to 800 or even 700 or even 500, but your mortgage has gone up from 2% to 8%, your payments are not going to be cheap. There'll be more. So it doesn't make any difference. That's what they're trying to do. They're trying to curb demand. They're trying to reduce demand by increasing the basically you can't over leverage anymore because the cost of borrowing is going up. Does that make sense?
Yeah, absolutely. It's even showing like right here. I'm going to share another screen once again because you were just touched on the housing market, which I'm now seeing, by the way, it's out the way. There's a lot of issues happening with people who have the higher priced homes right now. Las Vegas is getting hit that way. I have family out there and everything. Well, my wife has family out there, and I kind of always keep an eye on the real estate market out there. And people who typically have homes now that are over 800,000 are having a hard time selling it. They're starting to reduce their prices of their homes. There's this YouTuber. He's very popular out there. His name is Jeremy. He's a total idiot, just to be straight up. I mean, he's got like over 1.5 million followers, but he's like the guy who pumps a bunch of those shitty stocks and penny stocks, and he clearly doesn't know what he's talking about. But he has a home in Las Vegas, and I think he had it for sale for $1.4 million. Couldn't sell it, dropped it down to 1.3, still can't sell it. Now is at 1 million. So that should show you like people are not right now not buying homes because the mortgage rate is just so high, and it's seeing less and less people applying for mortgages as well. Because why do you want to get a mortgage that's like 6%, where less than 2 years ago was like 2%. So it's getting kind of crazy. Even like the Europe, the euro. I don't know if have you seen what happened to the euro? It's like 1 for 1 now, which is insane. I don't ever remember seeing that ever since we transitioned over to the euros. I don't remember seeing the euro being a 1 for 1. So I could be wrong though. I didn't look at it. I just noticed
I've never seen it in my lifetime.
Yeah, it's good for me. I'm planning on going to Europe here end of the year. So if it stays like that, hey, it's good for me 1 for 1. But typically, every it costs you about $1.20 to buy €1. That's how it was before. And same with the pounds. The pounds decreased by about 20 cents, 30 cents as well. So it's people are getting affected left and right. And then you look at the Russia, and the ruble is just going up. So it's insane what's happening right now with the economy.
Mark, we started this podcast where I think this is our 11th episode, probably 2.5 months ago. And we've been on the same page. We've been telling every single person watching this that be careful. Cash is king, cash is king. And I just want this to be an opportunity for people to reevaluate and audit the people that they're listening to. Because 6 months ago, 3 months ago, even 2 months ago, some really, really big accounts were telling you to buy stocks. And those stocks are down 40 to 80% depending on which ones you bought. And for me, it tells me that they have a complete lack of macro understanding. And just because something's cheap, we're in a situation here where people are going to have a hard time paying their mortgages and affording groceries. Because, like, think about this, man. If I worked a job, and when I did work a job, my biggest raise was 3%. And that was if I'm exceeding expectation, which means that my income's gone down by 6%. And then the chart you've shared here is showing that everything's gone up by 30 to 50%, which means that I can afford less and my cost of borrowing has gone up. My taxes remain the same. So, but I'm buying the dip. So that's something that people should really think about.
So on the flip side with that, though, when it comes to long-term investing, again, because you're more of a trader, but regardless of if you're invested at, 3,900 or at 4,000 or over 4,000, you're going to be fine long-term if you can weather the storm, right? It's just
the thing is, bro, you need to define the parameters of fine. Do you have a 12-month emergency fund? Are you good if one partner gets laid off? Do you know what the goals of that investment is? People aren't talking about this, right? Like, yeah. And like, think about this, Mark. My community, your community, we're talking about visible minority. What are they doing? Are they dollar cost averaging? Are they like set? They know what they're doing and they are just, using their disposable income, or they're using their hard-earned money and putting it in stocks, thinking, in 10 years, it's going to make them a millionaire. Let me ask you this. You buy Apple for $10,000, okay? You buy Apple after 10 years, how much do you think that's going to be?
Probably I'll probably double it at least.
No, minimum. I say do it 10x, 100K, right? But there's going to be opportunities with 10,000 you can do. And that's what me and you have been very open. If you've got $1,000 and that's all you have, I'd rather spend it on my own learning. Does that make sense? I wouldn't tell you to go do it options trading. I just say go learn an income skill. I'm not saying options isn't, but like you're gonna have to learn. $1,000 could be just spent on courses and stuff. So like there's a bunch of different ways. Options is not the only way to do it. A million other ways, but I just feel like the standard pitch is just buy stocks, generational wealth. There's way more intricacies to it. Like you need to make sure the base is set before you get in there. Majority don't have the base set. That's all I'm trying to say.
Yeah, I'm actually going to do a video on my YouTube channel when I come back where I'm actually going to address that, especially when it comes to the minority community. There's been studies done and there was multiple articles that was written that shows that for some reason, minorities fall for these scammers and these quick rich schemes. Like they're willing to fall for that a lot quicker than, learning a trade, building a business, saving money. They're very focused on trying to come up right now instead of understanding that it's a compound effect. And it apparently really, really affects a lot of the minorities, especially during the pandemic is when that happened. Even looking at the Susu groups. Have you ever heard of those before? The Susu investing groups? It was a thing that it started. The first time I heard about it was at my church. Guy came up to me. He's like, "Hey man," it's like, "Have you ever heard of Susu?" I'm like, "No, what is it?" It's like, it's a giving circle. So essentially you invest $50. You get 3 other people to come in. They invest $50 after Pyramid 2 weeks. Scheme. Yes, that's basically what it was. And I noticed it was majority in the Black community, churches, poor people, just straight up. It became this huge scam. They went on Telegram. People were just putting money in there because the first time when you tried it, depending if you're on top, you're going to make money. But eventually, it's like a pyramid scheme. Like I said, someone at the bottom is going to get screwed because you have to keep bringing in people to get paid, and you have to wait like 2 weeks or so. I know some people at church who did make money, and then I also know a lot of people who got screwed at the end. So I tried it once. I don't know why. I was like, $50. I was like, let me try it. I don't know. No idea what happened to it. I never got any money out of it or anything like that. So it's we fall for these really get rich schemes way too often. These these Instagram posts, these saying, hey, you know, buy now and you'll be fine. I still think regardless, like if you're a long-term investor, if you buy good quality companies, even right now while the market's going down, I think you'll be fine. But like you said, you need to have a foundation set first where it's not money that you need. You need to be able to weather this storm. And if you don't have money to weather the storm, you should not be investing right now. You should maybe wait until we really see a clear direction where we're no longer in a war, where interest rates aren't skyrocketing, where we're not in a, you know, dealing with inflation. You know, this is so much stuff that we're dealing with right now that I think people are just kind of neglecting and just keep pouring more and more money in the market. Because I'm gonna be honest, I've been very honest with you guys. I still buy stocks when it hits below 3,800. I typically start buying a couple of shares in things, ETFs, Apple, stuff like that. When it hits 3,700, I'll buy even more. But I'm have disposable income, so that's a difference. I'm not a person who's living right now paycheck to paycheck, just trying to get by. So that's very much a difference. And you have to have that reality check with yourself and look in the mirror and say, is this the right time? Am I doing this the right way right now? Because it's okay to step back and just relax. That's my 2 cents. I think I went on a long rant there. So yeah, that's pretty much all I got. What about you, Mo?
Yeah, I think it was good to bring that because you hear one messaging, right? Buy stocks, buy this stock. You think that's what everyone's doing. So you want to do that too, but everyone's got different goals. And so that's kind of, you have to think that way. And I realized that, and I know it's really dumb that I realize that now, but I don't know, maybe there's people that still don't see it. So I want to share this. A lot of stuff that gets posted on social media like Twitter, Instagram, and TikTok has nothing to do with reality. It's about grabbing your attention. So the stuff that gets most engagement is what gets posted. Does that make sense?
Yes. We've seen it ourselves when we talked about Palantir. That Palantir video did better than the other videos because Palantir is one of those stocks that everyone's really focused on and think is going to go, you know, 20x.
So I made a post about VIX, right? I made a post that how you could have used macro and pattern recognition and supply and demand to make, I think, that trade be 120%, right? I know if I want to get more views, I could use the video of SPX that I did yesterday. And the title would be how you can make $20 to $400. So that's a 2,000% return in 1 hour. That video will get a lot of likes and a lot of engagement, but it's going to attract a lot of people that are just looking for that kind of volatility. You've been trading for a while. I've been trading for a while. How often do you see a 2,000% play in an hour? One, how much money do you put on it? Two, after you put in money, how often do you sell so early then it runs? 99% of the time you'll do that. There's always people that are playing with big account. They'll leave 2 or 3 contracts, and then sometimes they'll post a percent gain. Now, this guy might have left 1 contract, and it went from $20 to $400, but the percent will show 2,000%. Post out for marketing, a lot of engagement, gets the wrong crowd. A lot of people will take loans and invest it. So that's the stuff that you have to kind of ask yourself. Someone's making 2,000%, and it's very possible. Okay, how often can I repeat this, right? Are there clear triggers to know that this play is going to go 2,000%? There's no clear triggers. Yet on Twitter, tweets like, I found a 2,000% play. It's going to be amazing tomorrow. That's the tweet. People go nuts on engagement. That's what's happening. Is it frustrating? Yeah, but I can't put energy on that. Rather just build kind of what we know. And that's what we're doing here. This is literally my way of saying I can help you this way. And that's, I want to talk about it. I have an options trading group, but if you don't have disposable income, that's the last thing you want to do. Because what you're going to do is you're going to take 4 or 5K of the money that you need. And after a month, you're like, fuck, I haven't made that 2,000% that Mo promised on that Instagram video. Let me go take a risky lotto on Twitter by an unknown person who's promising, and then you lose it all. So I see that a lot. My mentors see that a lot. The more experienced the person is, the less they talk about these percentages. They just talk about execution. So yeah, you're muted, bro.
Yeah. Yeah, I think you ended that pretty well. So hopefully you guys really took some notes and really listened to what we're trying to say. We're not trying to be haters on all these other influencers out there. We're just trying to be really real with everybody because it's the reality. There are a few people that will make a lot of money taking, like you said, $40 and turn it into 1,000. You never know, but it's so rare. It's so rare. And those people typically will lose it again because then they start risking way too much and thinking they could rinse and repeat that strategy, which again, it's a lotto. It's called lotto for a reason. So, but that's it, y'all. We're out of time. Mo, again, thank you guys. Tune in next week. We're going to have a special guest from Wall Street is going to come on. So we're going to talk to him and then we can cover, a typical hot topic, but we're probably going to jump right into the guest and let him talk and kind of give you guys an idea of what Wall Street is doing, how they're dealing with the recessions and stuff. So I really look forward to that. Again, my name is Mark. You guys can find me on my YouTube channel called Trading with the Dummy. I haven't posted anything in a while. I do have a cheat code algo review coming out. And then I'm going to be revamping my channel. That's why I've been kind of quiet on my channel. So definitely continue to tune in on Money Market Truths. Mo, where can they find you?
You can find me in OTB Clubhouse, but I have good news for you. I'm thinking of running a master class for free for people that want to learn options trading. So there's going to be no charge, but stay tuned in for that. But until then, I'll see you guys next week.
Wait, did you say free?
Yeah.
Did you say free? For the culture. No, kidding. All right, cool. See you guys next week. Peace out.